Hello and welcome to Capital Markets. I'm Tempula Shaju. Thank you so much for joining us again on the program this evening. The depressed state of the Nigerian economy over the last 2 years has been broadly reflected in the capital market activities as foreign investors' appetite for the Nigerian market basically crumbled significantly on the back of currency crisis and all the other macroeconomic variables that have generally declined. But thanks to the central bank's investors and exporters FX window, which commenced in April, signaling a possible return of flexibility in FX rate determination. The recent improvements in the global oil prices above the $45 per barrel figure, improvements in domestic production currently above 2 million barrels per day, fiscal responsiveness of the federal government, including the release of the ERGP, successful issuance of $1.5 billion Eurobond, and of course the recent passage of the 2017 budget, all suggesting possible rebound in economic activities from the second quarter of the year. These positive trends and their sustainability will dominate discussions on capital markets this evening, as we'll be joined by guests to look at the situation and its impact on the markets, the debt, the equities market, and all that connects with the capital market, which is always our focus on the program. Weekends generally. Let's now join Charles Fakroga, who is a trader on the Nigerian Stock Exchange. He deals on equities, to help us understand what the implication of the budget that was passed on Thursday by the National Assembly will imply for equities. Thank you very much, Charles Fakroga, for joining us on the program.
Yeah, thank you, Temple, for having me.
So, an appropriation bill worth 7.44 trillion naira. Does this mean that expenditures will be accelerated to ensure full implementation of set objectives enough to shore up growth, improvement in the Nigerian stock market going forward?
Yes, the appropriation bill that was passed by the National Assembly will go a long way in ensuring that the market comes back to where we want it to be and renews investors' confidence. However, for us, like you have said in your intro, for us to have a positive impact on the capital market, budget that was passed must be implemented. It is not enough to increase all the items, or for some ministries, you increase their money 100 billion, 4 billion. The most important thing is for the implementation of this budget. It is when we are able to implement what we have in the budget, that is when we begin to see positive impact in the market. Already we are seeing positive growth in the market. We are seeing equities that are going up because of the economic situation. So for me, my own take about the positive of the budget, though it came a bit late, but it's still okay. It is for all the government agencies to ensure that what is in that budget is implemented, and for the National Assembly to continue to play their oversight function and ensuring that what has been appropriated for is used specifically for that purpose.
All right, thank you very much, Charles Fakroga, for your thoughts on the budget and its impact on the market. We appreciate it. Let's now go for some stories that we had in the capital markets this week, and we'll take a look at Zenith Bank. Listed Tier 1 lender, Zenith Bank has announced plans to raise the second tranche of $500 million under its $1 billion debt program launched in 2014. The lender, in a statement issued on Friday, explains that the medium-term notes will be issued through an offshore special purpose vehicle and paid into the bank's foreign currency domiciliary account. The loan proceeds, which will be used for general banking purpose, will not be converted into local currency as the exercise forecloses a certificate of capital importation. Meantime, Fitch Ratings has assigned the upcoming Zenith Bank's debt offering B+ rating. The unsecured notes offering is the first FX corporate issued by a Nigerian bank since the central bank's interventions in the foreign exchange market, which began in mid-February. Zenith Bank had earlier cancelled the 40 billion naira domestic capital raising. Still in the banking sector, Wema Bank has announced the resignation of its chairman, Mr. Adeyinka Ashekun. His resignation, which follows his confirmation as an ambassador of the Federal Republic of Nigeria, is described as a step in preparation for his new role in services for the nation. In place of Mr. Ashekun, the indigenous lender has appointed a non-executive director of the bank, Mr. Babatunde Kasali, as the chairman of the bank. Mr. Kasali is a consummate professional with expertise in audit, risk management, compliance, and retail banking spanning over 3 decades. Staying with Wema Bank, one of the legacies of the former chairman of Wema Bank, Mr. Adeyinka Ashekun, is the leading role he played in the introduction of Africa's first fully digital bank known as Alert. Given his expectations on the contribution of the initiative to Wema Bank's profitability by the year 2020, the chief executive of the bank, Mr. Segun Oloketuyi, says a cost-to-income ratio of 40% is anticipated through Alert.
What we've done is we need to lower the cost to serve. By 2020, the aggregate cost to income of Wema Bank, we're targeting one of the lowest in the industry. Today we gave some indication of what that will be. We're looking at cost at about 40%, cost to income. Essentially what that means is because a lot is happening, straight through processes initiated by customers and all of that, the number of people that I need to process transactions, the platform, brick and mortar that I need to set up to recruit customers and all of that, certainly the cost will be much, much lower. So to the extent that I'll be able to bring my cost to serve, my cost to income ratio to somewhere around 40, early 40%. If that happens, margin get better, and then the bank gets a lot more profitable.
On capital market, we're still dealing on companies. Now, Owando recently became the toast of the traders on the floor of the Nigerian Stock Exchange as the share price of that company surged to 10 naira per